Good Thursday morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show. Before we get started, please take a look at the shared disclaimer and be aware that neither Market Chameleon, Dimitri, or myself are registered investment advisors or broker dealer. If you are searching for investment advice, please reach out to a licensed professional. As always, this show is for informational purposes only concerning Market Chameleon tools and products. And with that, morning, Dima.
Good morning, Will. How are you?
Good.
Uh, let's get started. Good morning, everyone. Let me share my screen here. And if you're joining us for the first time, Will and I, we do these shows in the morning to try to help answer questions you may have about the Market Chameleon tools, the data, or the analytics. If you have a question, type it into that live chat on YouTube. Will's keeping an eye on it, and he'll let me know and read it back to me. And to give you a couple minutes to put in those questions, we're going to take a look at the pre-market report to see if we could get some insights, what's going on in the pre-market hours. So let's start out pre-market report. And up here, you get this calendar view with summary statistics, what's happened in the pre-market hours on these dates. And it allows you to look at today's activity and compare it to the most recent history and eyeball if you spot anything unusual or a trend. Let's review today's activity, which is September 12th over here. And here we see 516 stocks trading higher, 291 stocks trading lower. We have 195 million shares trading on up volume, 66 million on down volume, and we have $3.5 billion worth of stock trading higher, $1.1 billion worth of stock trading lower. So from that perspective, it looks like today's pre-market trading has a bullish lean. Let's look at it from a couple more perspectives, and then we move on to our questions. And I'm going to slide down the page a little bit. And now we get this more granular view of what's going on in pre-market. We have our we see stock symbols with price and price changes and volume. We also have our most active list, our biggest percentage gainers and biggest percentage decliners. And I'm coming down here and I see 64 stocks made it onto our biggest percentage gainers list. We have 35 on our biggest decliners. So from that perspective, it also points to a more positive lean in pre-market trading. Now, about this list, when we look at pre-market trading, stocks could trade with very low volume, low liquidity. And because of that, we put thresholds for the security to make it onto this list. And if it meets those thresholds, it could be a security that could include a small cap stock, could be a ETF, it could be a leveraged ETF or an inverse ETF, closed-end fund, whatever's listed on a major US exchange. So to narrow down this group of stocks further, we could use our filters above. If you have a watch list, you can filter out this report by the stocks that you saved in your own unique watch list. So the idea there is if you want to just monitor and track a group of stocks, 10, 20 stocks, you save that list, you could screen this report or other reports that have this filter on by your watch list. Now, we're going to use this in ETF filter in our example. It's a similar concept. I'll show you how that works. If you click on it, you get this drop-down menu. This is a list of different ETFs. We're going to go ahead, select SPY. And when I did that, you could see that the list below got filtered by stocks that are holdings in the SPY ETF. And the idea there is, well, you save the list of S&P 500 companies, that's what SPY is, the S&P 500 holdings. We could use this filter to analyze those groups of stocks. And here we see 4 stocks made it onto our biggest percentage gainers list. 5 on our decliners. So that's a little bit more of a mixed bag, maybe a little slightly bearish. And you mentioned Tesla today has
Yep.
some news.
Well, SpaceX, they had a launch, so they just anytime they're talking about Elon and Tesla comes up, and they've
Right.
also, I think they're having a robo taxi announcement coming in the next couple of days.
Okay. Um, so okay, well, we gave it a couple minutes, Will, so let's take some questions if we have.
Uh, no questions popped up. We did have a
Okay.
question from Rob a couple days ago concerning charting the at the monies of you can pick any stock you want and how they've changed relative to the stock. If there's a way to do that. And before
Right.
you start, can I share my screen?
Yeah.
Also, just a little housekeeping note. This is going to be the last show of the week. I have my daughter. We're going to Ann Arbor tomorrow for a recruiting trip. So unfortunately, we won't be able to do the show tomorrow. The show will continue on Monday. Just wanted to let everyone know.
Okay.
All right. You ready to take over the screen?
Yep.
All right.
Thanks. Well, share my screen here. So I just went to Tesla because we started talking about it. But we'll use Tesla in our example. And I think the question is, how do you uh, track it was an option strategy, right? A straddle, not an option or an option straddle.
I think it was at the money options. Rob's on the show.
Okay.
Rob, if you want to clarify, I'm pretty sure it
Yeah.
was at the money option, how it moves. And
So
I don't know what month he's asking about, or it's front
yeah.
month, but he wanted to know if there was a place to, I guess, to look at the particular option and how it performs, maybe
Right.
versus the stock. I think that was the question, Rob.
Okay. So what I'll do is while we're waiting, I'm on Tesla now, options chain. I, I selected the options chain from the left-hand side. I'm going to close this menu. And now here, and we could select an option, or we could even create a strategy from this options chain and run an analysis. And we, when we run that analysis, part of it, we could take a look at the historical chart of the prices of those options. So this is yesterday's close, because we're closed right now. So this is as of yesterday's close. Let's say we looked at the 227 call. So I'm going to click on that. You can, click on the bid or offer. I clicked on the ask, and you get this option leg populated by September 13 call 227.5 for $4.10. We could change these, but it just auto populates by default when you click on it for convenience. But now we have this in front of us, and let's just say we wanted to look at this call. So I'm going to run this analysis, and this is expiring tomorrow, right? So this is September 13th, expiration. I run the analysis, and we get all this stats here, but what we're interested in is this chart. And this chart here is a price chart of that particular option, that September 227.5 call, right? So we know it closed at 405. Well, first let's explain how we track it. An option itself, unlike a stock, the value can move around as the stock price moves, even without trading. So it's a derivative, right? So even if the stock goes up, for example, in the call, and there's no trading in that call, the value of that option is still going up. It's worth more even without trades, because it's a derivative, right? It's influenced by the price of something else. So how do we track the value of it without trades? Because the stock is easy to track. We see the actual transaction where it happened. So with options, we look at a mark to market. And a mark to market is we look at two prices. We know that there's always uh, a market maker or specialist willing to buy or sell it at a price. So they're dealers creating quotes, which are basically, firm bids and offers that they display that you can trade on. And since we have those to reference, right, because these are real prices that you could trade against, even though they're quotes, they're tradable, right? Those are firm or the limit order book. So we could reference those. So then we have this bid and then we have this offer, and they're certain distance apart, right? So here's the bid right now for the offer's 410. So what is the value of this option? Well, it's going to be anywhere between 4 and 410, right? Because you could definitely trade it at $4, sell it. You could definitely buy it at 410 because those are firm. But you could also do something in between. You could put it in an order for 401, 402, 405, and maybe somebody will, trade it with you as well. So it's somewhere between $4 and 410. So the mark to market, we just say, well, we don't know. So we're going to say it's somewhere in between. Let's use the midpoint. So that's how we're tracking this option. We use the midpoint price. Okay. That's the approximate value. That's our best approximation. So we take these snapshots throughout the day and we track it. And this is what the option did throughout the day. And these are the stats. So tell me if Rob wanted to do a strategy, but the same thing if we created a straddle, if I added more and ran an analysis, it would give us a chart for that straddle or whatever strategy. So I'm going to go here and expand this, or I'm sorry, I didn't need to. I'm going to come up here in the summary. I'm going to drop this down and say, well, I want to see more, right, of this historical chart. So I'm going to click on this historical chart. And now I get this more advanced charting, right? So now I have, this is the option, but I also I have the implied volatility of that option and also what the stock did. So now I could compare them all on one screen to see how they moved in relationship to each other. So what we see here is, well, the stock kind of trended higher from here, up to here because we have the stock price in blue, the VWAP price in purple. So we could see that the blue line is above that moving average, day VWAP. So it's trending higher. And it's not surprising that the call price went higher. It's a derivative. And what the volatility did, the implied volatility looks like it was basically, it bounced around and went up, down. So it's been moving around like between 1150 to 230. Looks like it's been kind of, just bounce around in a small range. Then it kind of started ticking up. So two things may have played into this value, the value of this option going higher. The stock price, but also the implied volatility looks like it did increase. Towards the end of the day, then dip, but there was a little bit of an increase from here to here. And we could go back in time. Let's say if we wanted the same option from September 5th, could rerun that. And then now we have from September 5th. What did the stock do? What did the option do? What did the implied volatility do? So we could see here that this option now, went from 585 to 405. So the option itself is lower. Let's see what the stock did. So the stock from the beginning here was 223, went to 228. So here's the interesting thing. So in this period from September, where do we start? September 5th. From September 5th which is right here, to the last September 11th, that as of yesterday, the stock increased $4.61. So the stock's up, right? $4.61. And what happened to the option? So now we have a call option, right? We have a call option, and let's look at that midpoint price. It went from 595 to 405. So we're right in direct. If you're making a directional play, well, the delta went in your favor. The stock's up, right? So the delta exposure, that was in your favor. But why are we down $1.90 then? You know, what's up with that? Well, that's the other variables that come into play in the options. So one, well, there's decay, right? So the option, the same exact option, with everything else the same, you know, implied volatility, everything the same exact option on September 5th is worth less in September 11th because it's closer to expiration. It has less time, right? Less time value. So there's a decay there, right? That as you get closer to expiration, you're not willing to pay as much for it because you have less time for it to go up. So that's one thing, that there's a decay in this option. There's also implied volatility, right? So what happened in the implied vol? Well, that also looks like it came in. So let's see the implied volatility. And here we go. It went from 48.9 to 43.8. Is down 5 clicks, 5.1 clicks. So here, it kind of now explains away where you're like, well, what happened to my option? You know, I bought the option on September 5th. The stock's up $4.61. Like, what's the deal here? You know, why am I down? Well, now we could see what happened. We could see, okay, yeah, there's decay now. Yeah, September 5th is over here. September 11th, that's a lot of days. And also the implied volatility, you know, it went from up here to down here. So that was impacted the option. And here we have the table too of that. This is the table. If we go back all the way in time, we can see the price of the stock over here. This is the date. So September 11th, you could see the snapshots like every 5 minutes. This is the price. This is the price of the stock, the price of the option, where the implied vol is. So that's for one day. We could keep going back. Okay, so let me see. Oh, okay, this is interesting. I forgot we had this part. Well, let's go over this part really quick. So that's the data for the option. Here, this gives us a little bit more information about the trading of this particular option. History, actually. So I forgot about this. I'm trying to remember what. So this option here that expires September 13th, for each historical date, we see the stock price, the open interest change. So we could see if the open interest is going up or down. So you could see here it's going up. We could see the volume in that option. So we could see that's going up too. You know, it was like 1,500 September 3rd. You know, went up to 12,000 yesterday, 42,000. What is the volume weighted average price that it traded at? So keep in mind, these are trade now, not midpoint. These are looking at actual trades, which it had a significant amount, 42,000 trades, right? I mean, 42,000 contracts that traded. So what was the average price of all those trades? Because if most of them happen at $1 or like $2 and very few happen at 3, well, then the volume weighted average price was closer to 2. So given that, we see that the day's VWAP price was $2.38 yesterday. And what was the breakdown of the trading? Well, 95% of it were just single leg trades, meaning just buying or selling the call. 5% of it involved multi-leg trades, meaning that that option could have been part of a different strategy, call spread or whatever it is, could have been another part, but it was in a multi-leg trade. So now we kind of also get the trading history of it. And this is also interesting because now you could kind of see the interest of other players, how, are other people trading this option? Like, where have they been trading? How, what's going on with the open interest? And that also plays into maybe your decision to trade it or not, because here it looks like, hey, this option has pretty good liquidity. And it has pretty good liquidity. It's you could get potentially better price execution. The price discovery is a little bit easier to assess and so forth. So this can give you those types of insights. So let's come back up over here, and I'm going to go to a different option because I don't think, let me see if I could. So you can't see it quite on here. Okay, so we could also we could actually plot all the single leg trades here. So if we wanted to see how it traded, if I click on this single leg trades, you get these bars. And these bars look for options that, were either buy or call, wasn't part of a multi-leg trade. And the bar itself shows the volume. So see the volume to the right. So we could see here there's a big spike in volume over here around September 10th. It was, still a decent amount here. Am I on the right bar? And then it kind of tapered off, and now it's climbing back up. So this gives us an idea, if there was any particular day that sticks out trading in the option, or if the volume is trending higher or lower and so forth. So that's from here. And if we wanted to plot where the traded implied volatility, well, let me see if that's it. Actually, sorry. If we wanted to plot the implied volatility that it traded at, single leg trades, we could click on here and see these bars. These bars show, I gotta refresh my memory. Okay, so these bars show the volume and where this implied volatility traded at. Okay, so now we could see, well, here's the, where the implied volatility was, where there was a lot of trading. There's, I only have a couple minutes, but there's this other stat, it's called IV leans. And an IV lean kind of shows where there's a implied volatility pump. Implied volatility pump is that, there's somebody that is trying to improve the market either with a limit order, it could be a limit order resting order, or it could be a streaming order, but they're trying to improve the market from one side to entice somebody to trade with them. So if you're like, let's say, you're trying to sell an option. Well, if you have a lot of options to sell, or maybe even a few, you'll try to lower your price, right, below like maybe the NBBOS right now. So you keep lowering your price a little bit to try to entice somebody to trade with you, but at a better execution. So instead of just hitting the bid, and you could go the other way instead of just buying the offer. Sometimes maybe you have it in either you're willing to do it, but only at a certain price, or you have a certain amount you want to do. So you're going to try to negotiate at better prices. But those are implied volatility liens that when we have uh, certain strategies to try to detect them. And over here, we could see that, there's a bunch on the ask side, some on the bid side. But if we just looked at it, we could see 40 in this whole, date range, 43 on the bid side, 74 on the ask side. So more often we saw it on the ask side, which probably explains why the implied vol went down. Right. So if somebody is sitting there trying to negotiate for better prices on the ask, and they have a lot, to do, and there's not enough uh to take them out, that could weigh in on the value. So, right, well, I think I'm going to stop right there for today.
Awesome, D. Great job, my friend. When you went to Penn State, did you ever hear of the legendary horseshoe rail curve?
I don't think so.
It's have you heard of Altoona, the Altoona campus for Penn State?
Yeah.
Yeah, that's it came up in the chat as I mentioned I was
Uh,
going. And it's a curve. I'll send you a link because it's
yeah.
incredible to look at. It's just shaped like a big horseshoe. It was a marvel of its time because the rail, the rail line runs right across Pennsylvania to Chicago, right? And everything transported that way. So it's an amazing way they got through the mountains. So I'll send you a link. It's worth looking at. But awesome job,
Okay.
D. As always, remember tomorrow's show will not happen because I'm away. We will be back on Monday. So have a great trading day today, tomorrow, and the weekend. Thanks, D.
All right, great. Thanks, everyone. Have a great weekend. Stay safe out there.